Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. The debasement trade is officially dead, and the unwind is violent. Gold has plummeted 28% from its $5,600 peak. Silver is retreating in tandem. Bitcoin has fallen below $62,000, shedding its safe haven status as markets aggressively price in Federal Reserve rate hikes. Investors are fleeing speculative assets for yield. Meanwhile, the real economy tells a different story. U.S. retail sales surged 10% year-over-year in late June. This data defies recession fears, yet valuation gaps between premium, value, and mid-tier retailers remain dangerously wide. This divergence creates selective opportunities for disciplined capital allocation. On the macro front, Treasury Secretary Scott Bessent is projecting U.S. GDP returns to 3% growth by year-end. He cites the conclusion of the Iran conflict as a key catalyst, arguing that strong underlying fundamentals are finally taking hold. However, energy markets are struggling to catch up. Global physical crude discounts are deepening as Middle East supply ramps up. This surge is pressuring benchmarks like Brent and WTI, despite steady equity indices. The disconnect between physical supply and financial pricing is widening. In related news, corporate treasury strategies are shifting. Strive Incorporated CEO Matt Cole confirmed aggressive Bitcoin buying, pushing the company's treasury to 19,864 BTC. This accumulation signals institutional confidence in digital assets despite the broader market downturn. Analysts are closely watching ASST stock performance and capital programs for further clues on corporate balance sheet resilience. The market is bifurcating. One side is pricing in monetary tightening and geopolitical resolution. The other is betting on structural economic strength and strategic asset accumulation. The volatility is not random. It is a repricing of risk across all asset classes. Traders must distinguish between temporary dislocations and permanent shifts in value. The retail data suggests consumer resilience. The Treasury data suggests political stability. The crypto data suggests institutional adoption continues despite price headwinds. The oil data suggests supply shocks are being absorbed rather than amplified. This is a complex landscape. It requires precision. It demands attention to detail. It rewards those who read the data, not the headlines. The window for positioning is open. The window for hesitation is closing. Markets are moving fast. You need to move faster. Stay informed. Stay sharp. That's your market briefing. Follow Rumour with AI for daily market intelligence.